Hey everybody, welcome back to the channel. Today we will be doing some live charting and we will be focusing on supply zones and demand zones. I know in a previous video we did talk about support and resistance. This is similar, but it is a little bit more detailed as to pinpointing your entry and exit points for your trade. So we're going to be working on the SPY ETF, which tracks the S&P 500. And then we'll also look at the QQQ, which is an ETF that tracks the NASDAQ. So we'll have a couple of examples on some major indices. And hopefully this will give you a better understanding on how to identify your supply and demand zones so that you have better entry and exit points for your trade. So this is a daily chart. We're in Webull, and this is the daily chart for the SPY currently. And we're going to go ahead and start plotting our supply and demand zones here now with our rectangle tool. So as we look for supply zones, we're looking for areas on the chart, essentially where we see resistance and we see sellers stepping in to basically overpower the buyers. And so on this daily chart, we're pretty much at a area of supply currently. As you can see, the price of SPY hasn't reached past that 444.30. And so if I go ahead and use my drawing tool and start to map out this supply zone, I'm essentially going to go from the high and I'm going to go down to an area where I feel as though that trend started to break down. So we are mapping this area right here. As you can see, in this area, this wick essentially came all the way up here and sellers dropped it all the way back down. So this area right here is clearly an area of supply where sellers are sitting, waiting to go ahead and exit their trades. I would like to change this color. If I can, oops, without moving it. And I like to make this red, just essentially red being selling. And when I go ahead and make my demand zones, they will be green. All right, so we have our first supply zone on the daily chart. I want to drop down a little bit to a lower time frame to the hourly, kind of see what that looks like on the hourly chart. And as you can see, there was some activity, essentially consolidation in this area. This is giving you a little bit more detail versus the daily chart because each candle is 1 hour on the 1 hour chart. As you can see, it did come up here and made kind of a double top and then fell back down. So right now we're looking at this area. If we were to enter into this trade, we may put a stop loss above this area or this zone as we continue to try to short the ETF down to a level of demand. If we go down to a 15-minute chart, we'll see even more data. Let me zoom back a little bit. And as you can see, it's been kind of just consolidating and playing around in this area. It finally did this double top right here, and it's been trickling down ever since. So let's go back to our daily and let's identify an area where we may see that there is demand. So we're going to go back to our rectangle and I'll see this area right here. Remember, demand is kind of like support, but it's an area. So a demand zone that I see on the daily chart is this area right here. Again, we're going to change the color. We're going to make it like a green color. So we know that demand is green, supply is red. And why did I choose this area? This is an area where it essentially gapped up, consolidated for several days, and then bounced off of this demand zone and rode this all the way up to a supply zone. So at this point, we can see it's respecting this demand area. My assumption would be that it's going to head back down and retest this area before heading back up, or it could flush through it and keep going depending on if the buyers are able to hold up or not. But apparently the buyers were holding up here because it was able to bounce off of this zone and basically rise all the way up to a supply zone. If we drop down to an hourly, we see the demand zone, if I'm zooming out, is down in this area. We can also see there's one probably here as well on the hourly. It's a smaller one. Keep in mind, your higher time frames are going to have bigger impact as far as supply zones and demand zones, but you can run into some supply and demand zones on your smaller time frames. So here is another smaller one. This is going to be an hourly. Let's make this green. It's going to be an hourly time frame, but it very well could tap into this area and bounce back off, because you see what happened when it tapped into this area in the past. It bounced back off of that area. Okay, dropping down to the 15. Once again, we could also say that this area in here is potentially an area of demand, but now we're on a lower time frame. So on the lower time frames, they don't have as much impact. I truly believe that this red candle, this long red candle, is indicating that it's probably going to blow past this, because this is a lot of selling pressure right here. Okay, so going back to the daily, we've marked off our supply zone at the top here. We've marked off a couple of demand zones, this one being the major one, this one being the hourly. And so when we're looking to enter into and exit into trades, we're looking to find entries at these zones. So there's no just jumping right into a trade like right now and saying, okay, we're going to jump in here, we're going to go short, or we're going to jump in here, we're going to go long, because we don't know what the stock is going to do. So to get that extra confirmation, you want to be able to enter and exit where there are supply zones or demand zones that you've identified. So right now, I will be waiting for the stock to either come back up here to retest this supply zone and short it off of this area, or I would be waiting for it to come back down into this demand zone or this demand zone and go long off of one of these two areas. Okay, so let's go look at the QQQ, which is again an ETF that mirrors the NASDAQ. And we'll probably see similar patterns with these, because the NASDAQ, as well as the SPY, they carry a lot of similar stocks within their ETFs. The NASDAQ is a little bit more on the tech side, though. So they're going to be companies like your Apple, your semiconductor companies like AMD, things like that. So it will look similar as far as price action, but not necessarily the same. So we're on a daily chart on the QQQs, and we're going to do the same thing we did with the SPY. We're essentially going to mark off our supply area, which is this high 372.34. Essentially, the QQQs cannot get past that as of yet. So we're marking off this area, and we will try and drag it across here. Now, this is also very subjective. If you see something a little bit different, some traders may want to mark this down here and say this is all of this is supply. I prefer to be a little bit more exact, and I like to just bounce off of these wicks and the highs of these candles. So this is going to be our first supply zone on the QQQ. We are going to mark off a demand zone, which on the daily, I see this area right here being a demand zone. We'll make this green. And this is a tighter range actually than what we saw on the SPY. But it is a demand zone. As you can see, once it broke through this right here, it basically rose all the way up until it reached or found sellers and tapped that high and that became the supply zone. Now, when we go back down to the hourly, we'll be able to see more details with the candles as to how that looks. As you can see, it bounced off of the zone here. It kind of retested here. And then from that point on, it made a double top and has been trickling on back down. Now, it's reached the bottom of the supply zone. This is an area where we would watch to see if it actually breaks. And if it breaks, then we're looking for it to head back down to demand. If it holds here, then we may see this supply zone turns into a demand zone if we were able to get a reversal on the NASDAQ if this area holds. But we would need to see green candles. We need to see this area not be broken as we continue to go forward as far as price action. And at some point, we would need to see this top of this zone being broken as well for us to know that, okay, the selling pressure has run out. Now, if we drop down to a 15, again, we see this in a lot more detail. Once again, it's holding the supply zone right now. We are looking for it to make a decision as to what it wants to do. Now, on this 15, we can also mark off this area right here. And we can kind of just watch it because, again, it's a little bit of a consolidation area, I would say, where price action kind of just stayed in a range. And of course, this being on a lower time frame, it's not going to be as strong as your higher time frames, but it's an area to watch because this area could break. This zone could break and it could come down a bit, but not come all the way down to our daily demand zone, which is way down here. It could come down into this area and possibly consolidate before reversal. So there's small little market structure that you want to pay attention to in the midst of your higher time frames, just to make sure that you're aware that there's small support and resistance in between these zones. But the zones are where you're going to get your biggest moves. It's typically where the institutions are trading. And so you're basically riding the wave of these big financial institutions that are determining and dictating when price is going to, go from high to low and back down from low, back up from low to high. So again, supply and demand zones are ways for you to pinpoint your entries and your exits when it comes to making trades. They are very similar to support and resistance, but they are more so areas, whereas support and resistance may just be a specific price point. So I hope this does help to give clarity on what supply and demand zones are. Please like, share, subscribe. If you have any questions, please drop those questions in the comment section below. And I will see you all in the next video.